Financial advice for 18-year-olds and young adults. You've been warned. 1. Learn self-control. If you're fortunate enough, your parents taught you this skill when you were young. If not, take note that the sooner you're acquainted with the art of delayed gratification, the sooner you'll find it easier to keep your finances in order. It will feel really good when you're given your first credit card. And having a credit card in your purse or wallet may make you feel financially empowered, but you should only use it for things you can pay off within a month. And although you can easily swipe your credit card and purchase whatever it is that you want whenever, it would be better to wait until you have enough money saved up. If you think about it, do you really want to pay interest on a jacket or a can of soda? If you make the habit of putting all your purchases on credit cards, regardless of whether you can pay your bill in full at the end of the month, you might still be paying for those items in 10 years. If you want to keep credit cards for their convenience or for the rewards offered, ensure you always pay your balance in full when the bill arrives, and don't carry around more cards than you can keep track of. This financial tip is critical for creating a healthy future for your credit card history. 2. Come up with a budget. One of the first things you should think about is your budget. Make a list of the cash coming in, i.e., your salary, and your expenses as well, such as student loan and credit card bills, phone bills, and car payments. Differentiate your wants, such as eating out, from your needs, like your car and phone. It's also wise to put some money every month aside into your savings account and retirement account. Sum up your expenses and deduct it from your past tax income. If you're spending more than you're making, or you need to limit your expenses so as to save up for the big move, these are some tips to help you get on track. Begin by going over your list and challenging every expense. Decide what you really need and what you don't. Then hold up your impulse buys. Ask yourself if you really need a purchase before making it, how you'll pay for it, and if it can wait. And finally, try using cash only or a debit card for a month to cut down on credit card bills. 3. Control your finances. If you don't learn how to manage your own money, others will find ways to manage it for you. Some of these people may have ill intentions, like unprincipled commission-based financial planners. Others may mean well, but may not know what they're doing, such as Great Aunt Susan, who just really wants you to buy a house, even though you can only afford a treacherous adjustable rate mortgage. So instead of depending on others for advice, take charge and pick up a few basic books on personal finance. Once you're armed with personal finance knowledge, don't let anyone catch you off guard. Be it your better half, who slowly drains your bank account, or friends who want you to go out and blow tons of money with them every weekend. 4. Know where your money goes. Once you've gone through a couple of personal finance books, you'll come to the realization that making sure your finances aren't exceeding your income is very important. Budgeting would be the best way to do this. For a budget to be effective, you need to take a close look at where your money is going. It's important to keep track of how much money you make and account for every dollar you spend. Once you see how your morning fix adds up over the course of a month, you'll realize that making small, manageable changes in your everyday expenses can have just as big of an impact on your financial situation as getting a raise. Additionally, keeping your recurring monthly expenses as low as possible will ultimately save you a lot of money. If you don't waste your money on a high-end apartment now, you might be able to afford a nice condo or house before you know it. Visual proof of your spending habits also helps you think more carefully before spending. Take note that a budget is only as effective as your awareness of your incoming and outgoing money. 5. Start an emergency fund. One of the statements that you'll constantly hear in reference to personal finance is pay yourself first. No matter how low your salary is or how much you owe in student loans or credit card debt, it's wise to find some amount, any amount of money really, in your budget to save in an emergency fund on a monthly basis. Having money in savings to use in case of emergencies can really keep you out of trouble financially and help you sleep much better at night. If you also get in the habit of saving money and treating it as a non-negotiable monthly expense, pretty soon you'll have more than just emergency money saved up. You'll have money for a down payment on a house, vacation money, and even enough money for retirement. Don't just stash this money away in your mattress. Put it in a high-interest online savings account, a money market account, or a certificate of deposit. Otherwise, inflation will erode the value of your savings. 6. Start saving for retirement. Retirement is one of the things one needs to prepare for well in advance. Because of the way compound interest works, the sooner you start saving, the less principal you'll have to invest to be left with the amount you need to retire, and the sooner you'll be able to call working an option rather than a necessity. Company-sponsored retirement plans is something great to look into, and because you get to put in pre-tax dollars, companies will often match part of your contribution, which is like free money, and the contribution limits tend to be high, much more than you can contribute to an individual retirement plan. 7. Get a grip on taxes. Before you get your first paycheck, it's important to understand how income taxes work. When a company offers you a starting salary, you need to know how to calculate whether that salary will leave you with enough money after taxes to meet your financial goals and obligations. Luckily, there are plenty of online calculators that can take out the grunt work of determining your own payroll taxes. These calculators will show you your gross pay, how much goes to taxes, and how much you'll be left with, also known as net or take-home pay. 8. Protect your wealth. If you want to ensure that all your hard-earned money doesn't disappear, you'll need to take certain measures to protect it. If you're renting, get renter's insurance to guard the contents of your place in the event of a fire or a burglary. Disability income insurance protects your greatest asset, the ability to earn an income, by providing you with a steady income if you ever become unable to work for an extended period of time due to injury or illness. If you need assistance managing your money, find a free online financial planner to provide unbiased advice that's in your best interest, rather than a commission-based advisor who earns money when you sign up with the investments his or her company backs. You'll want to protect your wealth from taxes, which is simple to do with a retirement account, and inflation, which you can do by ensuring that all of your money is earning interest through means like market money funds, high-interest savings accounts, CDs, stocks, bonds, and mutual funds. 9. Plan for the future. Setting goals is crucial for achieving financial success. Saving is very important, but before you start putting money aside, you want to have an idea of what it is you're saving for and for what reasons. These goals could include buying a car or a house, going back to school, getting married, starting a family, or saving up enough so you can leave your job and travel around the world. If you know what your goals are, you'll have a better idea of how much you need to save and create a plan that will help turn these dreams into a reality. 10. Learn to cook for yourself. Fast food is neither good for your waistline nor your pocket. It would be in your best interest to save calories and money by cooking meals that are cost-effective. Learn how to make healthy, delicious dinners and pack lunches that are a lot easier on your budget than eating out every day at noon. Take snacks with you when you leave for work. If you go overboard with processed foods or restaurant meals, the excessive calories and sodium can result in costly dollar bills. It's also important to plan your meals before you make them. You'd be astonished by how this affects your finances. You'll probably discover that a significant fraction of your budget goes into your grocery shopping. Planning your meals in advance means that you only buy what you need when you shop, reducing waste and cutting down on unnecessary costs. It also means that you can buy your week's shopping from a larger supermarket all in one go, instead of spending more in local convenience stores throughout the week. 11. Always try for a cheaper price. Be wise about who you're spending your money with. In a lot of cases, you might be able to get a better deal with someone else. Compare different prices for your gas and electricity bills, your house and your car insurance, and even where you shop for your groceries. Most shoppers just settle for the displayed store price. You should never be afraid to ask for a discount, especially on a big-ticket item, like a new appliance or a car. You'll usually find that prices are more negotiable than you might have thought. For example, you could get a store clerk to match a lower price advertised by a competing retailer. Car lots, food stands, secondhand shops, and big box stores are perfect places to negotiate. You can always save a lot of money by switching to a different provider or to a different shop. 12. Don't ignore life insurance. A 2017 study known as Younger Self found that more than a third of adults in the US don't have insurance. Not only is life insurance important for protecting the family you might leave behind, but it's also a good saving tool for yourself. Some policies have a cash value savings portion that increases through interest or investments. You can take that money out tax-free, up to an amount that's equivalent to the premiums that you've paid into the policy. Well, that's all the advice we have for you today. I hope you enjoyed it and found value in it. If you did, go ahead and give the video a thumbs up and subscribe to the channel if you're new and interested in more content like this. Share this video with an 18-year-old in your life. And if you have any ideas you'd like us to make a video about, let us know down in the comments below. We absolutely love helping you guys out. And we want to make content that really speaks to your problems. With that said, have a great day, you guys, and I'll see you all in the next one.